loan, if you can rate me any speed is available, access is important, and once access is available, then the appropriate production. Now the first misconception is, no frill account is not financial inclusion. Yes, we also agree. But you cannot give a banking product without an account. Account is the main menu. Unless you open a bank account, how will you give him other banking products and services? So first you have to open no frill account. But if you say no frill account is not the financial inclusion, Reserve Bank has never said. We said that financial inclusion is availability of appropriate financial products and services in a cost-effective manner by mainstream financial institutions. So another confusion. Microfinance, we are not doing anything. This another small company NBFC, no, they cannot bring the financial inclusion. Our definition of financial inclusion is to be brought by mainstream financial inclusion, including private sector banks, and I am very happy. I congratulate Yes Bank, Mr. Rana Kapoor. They have understood the concept. And I am again telling you, it is not the public sector banks will bring the financial inclusion in a real sense. In this country, financial inclusion will be brought by private sector banks, and we'll see in the next 1-2 years. And that's why what we say, that it has to be done. The most important point, it cannot be done with charity. It has to be done in a profitable manner, sustainable profitable manner. It cannot be done through the direction. But as a regulator, we have to facilitate the job. We have to persuade the bank.
Subject to correction, my understanding is that as of now, the capital adequacy of emerging market economies is more. They have actually more headroom. There is a lot more that advanced economies have to do to reach the Basel III standards. And emerging market economies don't have the overhang problem. So in that sense, the adjustment is easier. Now, as far as the applicability, whether it should be exactly the same standard, I think there is enough flexibility, and that has been explained to take care of the special needs of the developing countries.
Yeah. Usha, did you want to add something to that?
Yeah, there is sufficient room for what we call national discretion. And even in the quality of capital, in fact, the definition that we use is more stringent than Basel III.
And you think that's a good and appropriate
So,
thing?
I mean, that's what we
Is that
we
because
followed
there's
all
a
along.
confidence issue more?
No, I don't think so. I think it's always been very conservative in the definition of
Yeah.
capital. So we felt what really is of loss absorbing capacity has always been put in capital, whereas that concept and principle has only now entered into Basel III.
Yeah. John?
Yes. Very briefly, your question was about regulation, and certainly the discussion about financial sector reform often centers all about regulation. And my point would be a simple one. That's obviously critical and important, and there's been important progress, as Jaime has pointed out. But our own work at the IMF suggests that weakness in supervision was every bit as important in causing the crisis as weakness in regulation. And if there is not important progress in strengthening supervision, then the changes in regulation are only going to leave the job half done. Moreover, there needs to be, part of the problem is too big to fail, it's also clear that there needs to be progress on resolution mechanisms, both at the national level and at cross-border level, which we've seen, for example, the failure of Lehman Brothers, which wasn't that big a firm, caused tremendous problems that linger to this day. They haven't been cleared up because of the lack of a resolution mechanism. This is by far the most difficult aspect, but it is to reach agreement, but it's very important. And then fourth aspect of reform is the assessment of the implementation of the reforms. It's not just a matter of saying, here's the new laws. Someone has to go around and take a look and see, are they actually being implemented? This is an area, on resolution, virtually no progress has been made. On supervision, we're just getting started. Happily, on assessment, the financial sector assessment program of the World Bank and the IMF and the peer review process of the FSB, the Financial Stability Board, is ready to take a look and make sure that the progress is actually put in place.
You know, I think these are all great points. And if you look at Lehman, you could argue that the problem wasn't in the rules, it was in the way they were carried out. For example, the rules say that Lehman would have had to set aside 100% capital for its real estate exposures, but those rules were never enforced. You know, and yet it is so hard to be a public official today. How worried are you that, as you say, it all depends on supervision, it all depends on human capital? How concerned are you about the quality of supervision, the quality of people in the public sector today? Jamie.
No,
Go ahead, Bill.
No, I had a few comments. The one is there is a lot of work being done at the level of the FSB in terms of improving supervision. So first, I would agree completely with that and with that statement, and I think it is clear that same regulation produced different results in different countries. And part of the answer of why it was so different was different quality and intrusiveness, in a positive sense, if that's positive, on the supervision. And in fact, one of the normal questions is if someone had a problem, why do I have to take the same pills than the others?
Yes,
that's
exactly.
why if there has been a problem in a few countries and now the whole world have to have the same medicine. And I think this is not fair in the sense that we have learned a lot of things that were not correct in the regulation. So we need to improve the regulation because there were lessons for everybody. And in addition, of course, we have to improve supervision. And I think there is a tremendous effort to improve supervision. There are new principles, there are new core principles. There has been a lot of work, but it will be a much more difficult work because we are setting the bar very high. Because now we are asking the supervisors not only to look at the individual institutions, we are asking them to also try to look at systemic risks, which is a much more difficult and which requires not only regulation, not only better supervisors, requires also institutionally different architecture, and that's why there are some of these, I would say, macro-prudential supervisors that have been set up in Euro, in the Eurozone, in many countries, certainly here, also in United States. So you need a combination of better regulation, better supervision, and a different architecture, institutional architecture, to be able.
This is the green effect of what we've been trying to do for the last 2 days. Something very simple. Please. I'll take only a few minutes to thank this exceptionally wonderful panel, and Henny, of course, in conducting it so very well. Dr. Reddy is as radiant and as a matter of fact, as is his team, Madam Thorat, and of course our leadership from rest of the world has been absolutely most encouraging and given us a point of view which is very rare, that you read in newspapers but don't really imbibe in presence. I must confess that these 2 days on which Yes Bank in its partnership with the Financial Times has spent a whole year putting this program together. It's been ultra fabulous. The 7 sessions we've had between yesterday and today, and a wonderful live session with our wonderful finance minister, who not only spoke to us in person, but also took many questions from this international and domestic audience. And we have to really, he's not on screen anymore, but we still have to thank him profusely for being present with us. We didn't have any other politicians, but we had India's best. I must also share that Dr. Reddy, Madam Thorat, John Lipsky, Jamie Karuna have been personally present here despite their several commitments over the last couple of days in a leadership initiative led by Madam Thorat in her capacity as Director of CAFRAL. And despite that, we have been able to get some very precious time with this final and possibly the best panel that we have had. The best part of this whole conference over the last 2 days is really the response globally. In difficult circumstances, in a situation where things are on tenter hooks financially, from a banking standpoint, across the world, to get a response facilitated by Financial Times. And we, as a young Indian bank, combining with Financial Times, have been able to get over 400 international bankers. And this is only the first conference, despite the very extenuating and demanding, backdrop of people conserving travel costs and all sorts of, issues. I do want to say a few more things, that the speaker sessions, at least in terms of the notes which have been made, in terms of people value addition and everybody's understanding of what's transpired, has built not just an India factor, but equally understanding of global issues in a platform in our financial capital, India, in Mumbai. I'm very happy to report to you that the feedback sessions, my colleagues tell me, and literally most parts of the bank are involved in this terrific, game-changing initiatives. I'm very happy to report to you that the feedback has been enormously encouraging and very, very good. I just want to move on very quickly that the theme of the conference, while it has been, future opportunities in a growing India, equally I think the subjects that we have dwelled on yesterday and today have really imbibed that India, and we tried to say that earlier, is a bastion of financial strength. And a lot of this credit really goes to our ex-governor, who was very much present with us, who not only proactively spearheaded the golden era of the Indian economy during 2003 to 2008, but built the safety nets so that, we had a respectably good soft landing. And even today, despite some aberrations, 2 or 3 years later, we are still, by and large, in fairly good shape. So I really want to thank everybody who's come from all parts of the world. We have people from Latin America, from Australia. We have people from North America. We have people from all parts, Africa, everywhere, in small, numbers. But in aggregate, very many people who have taken the trouble to join us for these 2 very hard working days. Yesterday's dinner was a very light session. I really want to thank the Financial Times for agreeing to partner with Yes Bank. This is an idea conceived by Yes Bank, and we said we must get only the world's best partner. And somehow, believe you me, it's taken 1 year for this idea to really germinate into a very high quality partnership. I have to thank James Lamont. Is he here? Okay, so the big boss of the South Bureau, James Lamont, heads India, the South Asia, Bureau. James has done some terrific sessions yesterday too, and this morning too. And of course, Henny Spender. She is the global chief correspondent of international finance for Financial Times, for being like wonderful, really fantastic moderators over the last 2 days. It's really very, very motivating to see the best of the world trying to stimulate and encourage ideas and action in our own country. So this has been a very, very good couple of days. And as I said, that this is really an opportunity to not just build a platform. Yes Bank has invested, but equally I have to share with you that while we may have built the intellectual property in conjunction with Financial Times, I have to thank an abundance of my clients, my friends, Yes Bank, friends who have been very generous in terms of their platinum, in terms of their gold and silver sponsorships for a very, very valuable contribution, very abundant. So we have seen this conference really, really transcend Financial Times newspaper editions all over the world, and equally and very actively within the Indian media, print, magazines, and newspapers, at least over the last 30 days. So I have to really acknowledge everybody's contribution in the belief, in understanding that India today, while inwards and home banking driven and somewhat insulated as far as banking and financial risks are concerned, is moving forward. And a young bank like ours, 7.5 years in the making, with support from Financial Times, is playing at least an initial role in rolling out what I promise you is going to be an annual event, and incrementally it will get only better and better, and we will only collaborate with the very, very best, as we did in the last session with CAFRAL under Dr. Usha Thorat's leadership. So thank you, ladies and gentlemen, for this wonderful participation, for the commitment you made to come into India during difficult and adverse times when everybody is being cautious about costs, but yet the opportunity, believe you me, is always in adversity. And when you can seize the opportunity in adversity, truly we become better bankers, better business people, and most of all, better regulators. Thank you very much. This is very rare bites.